Good day, students. This is an introduction to ACCA paper FM Financial Management. My name is Muideen Akpino. I'm the FM team lead at Ivy League. I'm being supported by powerful team members, and we shall be walking you through achieving success in this paper. Let me start with the syllabus of financial management. Before I proceed into the syllabus, let me first mention to you that management accounting is a prerequisite paper to financial management. So also financial management is a prerequisite paper to advanced financial management and strategic business leader. Let's now go into the syllabus content. Paper FM has the following subjects as contents, ranging from section A to section H. Section A is the financial management function. And what this entails is that candidates will be expected to know financial objectives and also know the relationship the financial objectives have with the corporate strategy of an organization, which means that a company will have a corporate strategy and will develop the financial objectives to which the success of the organization will be achieved. Also in this section, candidates will be expected to be able to identify stakeholders of organization and their impact on the corporate objectives. There are numerous stakeholders, including customers, suppliers, government, shareholders, competitors, and so on. All of these stakeholders will have impact on the corporate objectives of the organization. Section B is about the financial management environment. In this section, candidates are expected to be familiar with macroeconomic policies like fiscal policy, monetary policy, and also be able to know whether this policy is focusing on expansionary purpose or contractionary purpose. In this same section B, candidates will be expected to know about financial markets and the intermediaries involved in the financial markets who are responsible to link up borrowers and lenders in the financial markets, including banks, including pensions, and so on. Section C of financial management is about working capital management. And this has to do with investing decision as well. You agree with me that all companies will require working capital to sustain the long-term success of the organization. And this has to do with receivable, inventories, cash, and payable. So it's expected that candidates will be able to know how to manage receivable, how to manage inventories, how to manage cash, and how to manage payable. You would also have to learn about what we call cash operating cycle here. You also learn about the funding strategies required to ensure that the management of these elements of working capital are superb. The section D of financial management is about the investment appraiser, which also have to do with investing decision. And in this subject or section, candidates will be expected to be familiar with cash flows. And when we talk about cash flows here, we are talking about the relevant cash flow. because some cash flow may be available in the questions, but they are not relevant to the project at hand. So also, candidates will be expected to know about non-discount cash flow and then discount cash flow. So you should be able to distinguish these two categories of cash flow: the non-discounting cash flow and the discounting cash flow. And this will take us to appraiser techniques that could be used for these different categories of cash flows. So we'll be talking about the non-discounting cash flow techniques, and we'll also be talking about discounting cash flow techniques. Candidates will be expected to know these different techniques and also be able to know their merits and demerits. Because everything in life will have its positives and will have its negatives. So these are examinable areas in financial management as far as investment appraiser is concerned when it comes to discussion, okay? Also as for calculation. Now, candidates will also be expected to know that there will be impact of inflation on cash flows, so also taxes on profits. So these are things that will be applied in investments appraiser. So also candidates will be expected to know about risk and uncertainty, because any project being undertaken might also be exposed to risk and uncertainties. There are different techniques that we'll also be talking about here in applying or, incorporating risk and uncertainty to investment appraisal. In this same section, candidates will be expected to know about specific investment decisions. Every organization will have to take some specific investment decision while undertaking a particular project. Good example of what will be expected will be lease or buy decision, asset replacement decision, and capital rationing decisions. Section E of financial management is about business finance. Here you will be required to know about the different sources of finance, including Islamic finance. In the area of Murabaha, Mudaraba, Sukuk, Ijara, Musharaka. And you also need to know that what is called riba in Islamic finance is what we call interest. And that interest is forbidden in Islamic world. The examiner also wants candidates to be able to know how you can cost the various sources of finance. So we'll be talking about cost of capital. So you have to individually cost the sources of finance. And then you then have to calculate a weighted average cost of capital. Weighted average cost of capital is important because projects that will be undertaken will have to be financed from any of these sources. And you can't say the cost of equity is what you use to appraise the investment. So you have to appraise the investment on the basis of weighted average cost of capital. So also in this section, candidates are expected to know about capital structure theories. There are different schools of thought who have come up with how a company should actually finance its project, whether to use debt or to use equity, or to have a mix of these two sources. Candidates also have to know how small and medium-sized entities, what we call SMEs, are being financed. It is important also to know that section F of FM has to do with business valuations. And business valuation here will expose you to some information requirements that will be needed in valuing the business of an organization in the area of shares and debts. So there are different models that candidates would also have to know on how to value shares of organization. Candidates are also expected to know how valuation of debts are being done. In this same section, efficient market hypothesis will be learned. Here you'll be talking about information in the capital market. To what extent is the information available to the participants in the market? You'll be talking about weak form efficient, semi-strong form efficient, and strong form efficient. We'll learn these details in the class. Now, section G of financial management is about risk management. Here, candidates will have to know the different types of risks: currency risks, interest rate risk, and also the causes of fluctuations in exchange rates and interest rates. Candidates will also have to learn about how to forecast exchange rates using interest rate parity, using purchasing power parity theories. Then candidates also have to learn about the hedging techniques for these currency risks and interest rate risk. A new topic has been added to financial management, which is the section H. And this has to do with employability and technology skills. Now, candidates are expected to reflect and demonstrate the skills that will be required for the FM exam using the available technology. Being able to navigate within the computer screen, to know where the formula is, to know where the discount table is, and all of those things. So which means your understanding of computer application is important. Let's look at the outcomes. Like I have said, the various outcomes that will be expected of the candidate. You should be able to discuss the role and purpose of the financial management function. You should also be able to assess and discuss the impact of the economic environment on financial management. For investing decisions, you should be able to discuss and apply working capital management techniques. You should be able to carry out effective investment appraisal at the end of the day. For financing and dividend decisions, you should be able to identify and evaluate alternative sources of business finance. And as well, should be able to discuss and apply principles of business and asset valuations. So also, candidates will be expected to explain and apply risk management techniques in business. For the new topic added, applying employability and technology skills, you should be able to use computer technology to efficiently access and manipulate relevant information. Candidates should be able to work on relevant response options using available functions and technology as will be required in the workplace, which means ACCA will be preparing you well, for you to excel in your work environment. Also, should be able to navigate windows and computer screens to create and amend responses to exam requirements. Like I said earlier on, that you should be able to know where the formula is, where the discount table are placed on the screen, and be able to navigate and use them well for the purpose of the exam. Also, candidates will be expected to present data and information effectively using the appropriate tools. So in financial management, you'll be making use of spreadsheets, and you are expected to be able to use cells appropriately. Candidates are not allowed to add code figures, except for your input in the cells. So you input all your cells in various cells. Your data in various cells, and you should be able to make use of the cell to calculate using those inputs. Not that you use your calculator to do your calculation and then you put the final answer in a cell. No, you have to calculate in the calculating cell. linking up all your input cells to arrive at your results. This is how you can get your mark. Let me run you through exam structure. There are 3 sections in paper FM. Section A has to do with 15 objective text questions, wherein you'll be scoring 2 marks for each question. Section B has 15 questions, 5 questions for each case, which means there are 3 cases, 5 questions per case, and then in all, there will be 15 questions. Each question will attract 2 marks. That means section B, it's 30 marks. So section A is 30 marks. Section B is 30 marks. Out of 100 marks, section A and B are already 60 marks. Then section C is 40 marks, and it has 2 constructed response questions, each of which will be 20 marks. Now, what are we expecting you to have covered for each section? Examiner expects you to cover all areas of syllabus for section A. For you to say you are prepared well for the exam, for section A, you must have covered the entire syllabus of FM. The same thing applies to section B. You must have covered the entire syllabus to prepare well for section B. So for section C, specific areas are the focus. So looking at working capital management, it's very important you prepare very well for section C. If you need to pass well in section C, you need to prepare well on working capital management, also on investment appraiser and business finance. So this has to do with you knowing cost of capital very, very well as well. You need to know that this is a 3-hour paper. A 3-hour paper would mean that you should prepare for 180 minutes. 180 minutes here will mean that you would have to prepare for each question to spend like 1.8 minutes. 1.8 minutes will mean 1 minute 48 seconds, which means that you have to be time conscious. All questions are compulsory, so examiner does not want you to leave any question unanswered. You have to answer all questions. You must provide response to all questions before you can actually excel in this paper. This is a paper that have a mix of computational and discursive questions. So you don't have to say you want to focus only on calculation areas. You have to prepare for both. Okay, I can tell you for free that in paper FM, discussion takes almost about 55% of the whole marks. So it's important that you also prepare very well. Prepare well in the area of discussion. Some questions will adopt scenario or case study approach. So you must relate with the scenario to provide your response. You can't only work with the knowledge you've gathered. You have to apply the scenario in your response. You also have to get familiar with formula sheets. You also have to get familiar with discount tables. Let's look at this question so that I can run you through how to apply scenario to some responses in the exam. Now, let's look at this question. ZPSCO is a past question in financial management. This company uses dollar as home currency. This company has taken out a fixed interest peso bank loan several years ago. And this loan has been taken when peso interest rates were relatively cheap compared to dollar interest rates. Now, this company does not have any income in pesos. Recently, the company has found out that the economic difficulties have now increased the peso interest rates, while the dollar interest rate have remained relatively stable. So there's a challenge on their payments. because they'll be paying more because the interest rate on peso has gone up due to the economic challenges. Now, the company must pay interest on the date set by the bank. That has been the agreement with the bank. There's a payment of 5 million pesos that will be due in 6 months' time. The following information is available. Spot rate is given as 12.500 to 12.582 peso per dollar. The 6-month forward rate is given as 12.805 to 12.889 pesos per dollar. Interest rates which can be used by the company are given below. The interest rate for borrowing, the interest rate for deposit, with respect to the currencies involved here, pesos and dollars, are given as follows. Now, let's look at the question I'm talking about. Which of the following methods are possible ways for ZPSCO to hedge its existing foreign currency risk? We have matching receipts and payments. We have currency swaps. We have leading or lagging, and we have currency futures. The following answers are given. Candidate can choose all of these as appropriate answers, but I can tell you for free that the correct response here will be option C, which is currency swaps and currency futures. Why is it that option 1 and 3 are not correct? Matching receipts and payments will not be a correct response because the company does not have any income in pesos, so it cannot match receipts and payments. Leading or lagging will not also be a correct response because the company must pay interest on the date set by the bank. So you will now see that these two information I've extracted here, they are provided in the scenario. And they now negate option 1 and 3. Ordinarily, 1 to 4 will have been possible ways for the company to hedge its risk. But because of these two statements, option 1 and 3 are not possible ways any longer. So this is a way of applying scenario to your response. Now, formula sheet is also very important. You must get familiar with formula sheets. These are the formula that will be provided in the examination. So every other formula you'll be learning in class, you must know them offhand. Okay? Now, discount tables. You also need to be familiar with the use of discount tables. There are 2 tables involved in the exam that will be given to you. You have present value table. This present value table is useful when you need to discount cash flows that will not be a constant cash flow year on year. So you have a cash flow in year 1, let's say $200, year 2, $100, year 3, $150, year 4, $500. So these are not same cash flow from year 1 to year 4. So you can use this discount table to actually discount those cash flows to their present value. So let me quickly tell you, if a discount rate of 10% is given, and you need to discount from year 1 to year 4, as I've given you these various cash flows. So you'll be using 0.909 for the cash flow of year 1, 0.826 to multiply the cash flow of year 2, 0.751 to multiply the cash flow of year 3, 0.683 to multiply the cash flow of year 4. And you sum all of these values together to get the net present value, which is talking about the today's value of those cash flows. The other table that will be given to you is annuity table. This is useful when you have a constant cash flow happening year on year. So let's say, for instance, $500 is to be received in year 1. The same $500 will be received in year 2. The same $500 will be received in year 3. The same $500 will be received in year 4. So you don't need to disturb yourself. All you need to do is that for how long is it going to happen? For 4 years. Check what discount rate are you given. if you are given 10% at discount rate, just look at 10% against year 4 year, and you see that the discount factor to use, which is the cumulative discount factor for the 4 years, is 3.170. So just use 3.170 to multiply $500. That is where there is a constant cash flow. You use the annuity table. Now, let me also run you through the learning resources that are very important to excel in this paper. You need to make sure you read up the examiner's approach to FM, read up the objective test questions for applied skills exam, practice objective test questions as many as possible. Read up the how to approach discursive questions in FM. Okay. Read up also the examiner's report. Read up read the mind of the marker. There's a report like that. Read the mind of the marker. It's very important. Also, make sure you go on ACCA practice platform and ensure you practice questions as many as possible. Thank you so much for listening. I wish you the best in this paper.